Good afternoon, ladies and gentlemen. The time is 12:45. Um, Today is the 9th of March. Today wasn't a very good day for me. My view went wrong immediately, and so as a cost of that, I had to give up a lot of potential opportunity that was there on Wednesday. And I think so. That was one part. View going wrong, trade not working out. That is fine. Second part was. Kind of think I took a unnecessary trade at the end, which was borderline revenge trading. But I kept the risk in check for that very well. So I'm happy about that part. But really, a little bit out of sync, and I think I got thrown off a little bit. So let me go over exactly what happened. So first of all, we had a very volatile US session, as has been the case every day. So that's like normal. SGX Nifty at one point down 100 plus points, and then it's up 200 points, and then it's down again. So really a lot of up down volatility happening there. And then this morning, SGX Nifty indicating about 15,900 at the open, whereas we actually open above 16,000 and we stay above 16,000, never heading below 16,000. So what is my view here? My view here is, look, before this big major gap down happened, this was the low, right? So this you can say about 16,150 was the low. We are opening towards the higher side. Many people would have shorted call options from 16,000 above only, but still at 16,200 and above, definitely they would have shorted call options. And there will be some amount of, like, it's lately we've been saying that every day we have volatile up moves and then down moves, both wave moves, right? So to take a relatively bearish position from this level, to short a call that has at least 2 times the premium of put, because in case there is a down move, then the call delta will be much higher and it will give me a good profit into the down move. So let me see what is the order that I punched. The order I'm punching is for 26 rupees. I'm selling 15,500 put option, and for 48 rupees I'm selling 16,300 call option. So idea is this is almost 50 rupees. This is around 25 rupees, 2 times, and that itself was like the worst possible view you can have today. But clearly, as I'm punching my second order, I'm getting almost like a confirmation of that, where this call option has come to 40, put option has gone to 31. Idea being that okay, into whatever up move, calls have gained a little, they will start to correct very quickly. Once again, that view went wrong. I didn't want to take my entire position right off the bat, so I was building into it slowly. This particular green candle formed, calls absolutely blew up. They went to 60 plus, and yeah, the put options did give up a little bit, but very little bit for that matter. I think about 5 points. So I built my position just about here, and my position was 15,500 put short and 16,400 call short. Now even if here you see I'm shorting the put for around 19 rupees and call for 35 rupees, because my bias is still that okay, there's a good chance we will have a little bit of a pullback move to 16,000. Like as we're heading higher here, the idea is that okay, we will have some kind of pullback to 16,000. That didn't really come. Now, as we started to take out this particular level, the idea is that call options still didn't make a day's high. So here, as this breakout happened, call options never went to the day's high in any of this up move. So I was still comfortable holding it because my position was in a green. Let me show you. So first of all, what was the cost of this? At 9:30, so when I entered my position around 9:16, the 15,700 put at the same time was trading at close to 50 rupees. 15,700 put 45 to 50 rupees. You see it's trading about at that point of time it's trading between 45 to 50 rupees, and that has come down all the way. By 9:30 it has come off to 30 rupees. Now as a consequence, why am I going over that? As a consequence, I have missed out on whatever that put side IV crush was going to take place. I shorted this at 36, it has gone to 39. I shorted this at 22, it has come to 14. Now if I move up my put now after such a large IV crush, this is basically like 40% of the value in the 17,400 put is gone in the first 15 minutes. In the first 15 minutes, it's lost 40% of its value. Had I kept a neutral bias, which means if I had shorted the 15600 or 15650, then this position would have been an excellent profit. But I didn't. Because of that, the puts have lost a little bit to compensate for the loss that the call is giving. But I am not particularly in a profit because I got the direction 100% wrong. Right? I have 2 times the premium in my call as my put, and the market is going up. So I mean, this is just because IV is coming down. It's a Wednesday, and you had morning IV crush. That's why it's in green. Otherwise, this position any other day would not be in green. So I missed that bus, and now I have an option. Okay, do I try to jump onto that bus even though I feel like it is gone? Answer is absolutely not, because I've missed that IV crush. Now I can't move up my puts and get aggressive in order to try and benefit from a further fall off. So I hold the same position with the idea of keeping a stop loss of 42, which was the day's high on this call. Kept this was, and that stop loss didn't hit in the entire first half. The call was slowly but surely giving up value, and then into this down move, I moved down my call stop loss to 32, which was a good thing to do because clearly there was strength in the market at that point of time. Yeah, so you can see this was the swing into the pullback. This was the high that it made, 32 rupees. So as and when it started breaching 32, I exited. So this was my exit order. Yeah, see, I'm going on 32.88, 33, little bit of slippage into exit. But still, fair enough. View went wrong, still a little bit in the green, took the exit, all well and good. Here is where I went a little bit. This was opportunistic, as I would have thought at that time. But at the same time, it was also not the right trade to take. Here, just as we were making this red candle, I decided let me sell the 16,500 call option. And by selling the 16,500 call option, keeping a very, in case we close towards 16,100, it will probably end closer to 8, 9, and I'll make about 6 points. So I've sold at 11.49. I've sold this for 15 rupees. I know this is borderline revenge trading. First of all, it's a directional trade. I haven't traded directionally in a very long time in intraday. Secondly, I know that there is a certain kind of risk here, because in case that short covering does come, then it's going to absolutely explode, which is what it has done, which is why I placed my stop loss. This I never do with my strangle position, as most are aware. I place my stop loss in the system. I placed it 2.5 points higher with a trigger of 17.75 and buy of 20, just in case it explodes. It got executed, and took this particular stop loss here. I think it was good of me to have the common sense to know that my mind is probably not in the best place, and that I need to have a system stop loss for this trade and keep it so that it hits and gets me on. On the bright side, portfolios will be doing really well. All the cash purchases made at 15,800 and below, those will be looking very good. I don't know if this is temporary, if this is like temporary relief, if this was way oversold and we had to have a bounce at some point. But clearly once we step into this zone, it opens up the range till 16,500, and that's about it. If you had a neutral view, today would have worked out really well. In this entire period, people would have made good money. If they didn't get out in time, then this might have been a problem. This up move, definitely the short covering up move would have been a problem. But I think apart from that, if someone had a neutral view, today would have been an excellent day. Especially the first half would have been very, very good. So yeah, thank you for watching. And today was just one of those days that wasn't great, and I wasn't too happy with how I traded as well. But tomorrow is a new day, so at the end of the day, we'll have a fresh view tomorrow and see what is on the table in the morning. So thank you so much for watching. I hope you had an excellent trading day, and I'll catch you tomorrow for the expiry. Take care. Bye-bye.